bankruptcy of the Silicon Valley Bank in America, that the majority of us have never even heard of, will affect us in a way that many people cannot even imagine. Because, as we all know, if America sneezes, the whole world gets ill. But for people who are not in the financial world, all the terms are difficult and it's hard to understand what's going on. That's why in this video I'm gonna tell you about what happened and what consequences it will have in a very simple language. So keep watching. Let's look at some of the facts that are quite important. Actually, very important, I would say. This bankruptcy is the biggest bankruptcy of the bank since 2008. If you haven't heard about the Silicon Valley Bank before, it doesn't mean that this bank was little. In the US, there are around 4,000 different banks, and Silicon Valley Bank was the 16th biggest. This bank was situated in the Silicon Valley, and it was specializing on giving loans to startups. When the news came out, in under one day, $42 billion were withdrawn from the bank accounts of the Silicon Valley Bank. And the shares of this bank fell by 60%. This happened on Friday. And over the weekend, the government of the USA had to step in, because if they didn't, on Monday, the whole system would collapse because people would panic. People panicked anyway, but let's get to that. Let's look at the step-by-step events that led to this situation. It all started with the pandemic in 2020. This is when the US government printed lots of money. Different sources give you different stats. Some say that 50% of the total amount of dollars were printed in just 1 year. Others say that up to 80% of the total dollar value was printed in the year of 2020 and 2021. The US government was constantly promising that they will not raise the interest rate, even though this would be the logical thing to do. Historically, printing money would lead to high inflation. Not straight away, but in about 1.5 to 2 years, which is exactly where we are now, and which is exactly the consequence that we are experiencing today. During this couple of years, what banks were doing, especially smaller banks, they were taking money from people who were opening their savings account in these banks and investing this money into the least risky financial tool, which are US government bonds. They were investing this money into long-term bonds. Of course, nobody told us at the time about them doing that. Now, when we found out, it's kind of too late. The main mistake here is that they took the money from the short-term investments, because when people open their savings account in a bank, they usually open it for half a year, or maximum of 2 years, and reinvested this money into a long-term investment tool, thinking or hoping that the price of these bonds will not go down. But this is exactly what happened. When the interest rates go up, the price of bonds goes down, and this is just a normal reaction of bonds. But when people continue taking the money out from a bank, not because they are panicking, but just because the term of their savings account is up and finished, eventually the bank runs out of money that they can pay back to the people. Because, as you remember, a lot of money is invested and held in the US bonds, but the price of the bonds is now at the bottom, and obviously banks don't want to sell the bonds back to the government, because that would mean that banks would sell these bonds at a loss. But on the 8th of March, this is exactly what Silicon Valley Bank had to announce that they did. They had to sell $21 billion worth of US bonds with the loss of $2 billion. The whole thing happened in just 2 days. So can you imagine how quickly a bank, one of the biggest banks in the USA, can collapse? And did the people inside the bank know about the problem? Of course they did. But they didn't want to announce it in advance, because that would cause the chain reaction, and more people would take the money out of this bank and maybe other banks, that would eventually cause the collapse of the whole system. Of course, the real question is how many banks are in exactly the same situation but are coping with it somehow right now, so don't feel the need to announce it to the whole world. In my opinion, there are quite a lot of banks that did exactly the same thing, and I will not won't be surprised if in the next couple of days we will hear about other banks collapsing and going bankrupt. All the companies that had their money in the banks that are experiencing problems will also be affected. At the moment, the situation is dangerous. In fact, it's so dangerous that the US government had to announce an emergency meeting over the weekend to announce that all of the savings are protected. So the government is trying to calm everybody down and pretend that everything is okay. But answer yourself honestly. When the government tells you that don't worry, everything's fine, what is it you are starting to do? You start to worry. And let's think logically. Will people wait for the banks to collapse to then go and get the money back through the insurance scheme? Surely not. It's better to be safe than sorry, and I'm sure that a lot of people will get into the queue at the start of this week and they will get their money out of the bank, which will not help the general situation at all. What can we expect in the nearest future? I think there will be several more banks that will collapse, maybe some companies as well, that keep their money in these banks or are just somehow connected to the financial world. Of course, Biden will come out and talk about how we all have to keep our money in banks because this is the safest place. But I just don't think that people will believe that enough to risk the money that they've been trying to earn their whole life. Take a look at the stock price of the banks in the US today. All of them are red and the market is bleeding. Once they take this money out, where will this money go? I think the majority of people will reinvest this money into something that has a very good historical record of keeping wealth. For example, gold or silver. This will be the solution for the traditional investors. Or for the modern investors, the solution will be in crypto and mainly Bitcoin. Today, the price of Bitcoin and Ethereum has jumped up, and I reckon the tendency is going to continue. Let's wait for a couple of months and see if I was correct or wrong. If I was wrong, I will be the first person to admit it. Thank you very much for watching me today, and I hope to see you soon in my next videos. Bye bye.